Okay, so let's talk about the step-by-step process to obtaining a renovation loan. So the first thing that you want to do is you want to get a loan approval from PRMG, right? When we do a pre-approval, depending upon what your prospective loan amount is going to be and what your renovations are going to be, we are going to pre-approve you for that entire amount, right? We want to make sure that not only can you purchase that $500,000 home, but you can also qualify for that $100,000 that you need in order to renovate the property. We need to choose a property and make sure the project is feasible and receive an accepted offer. So what does it mean when the property is feasible? What that means is that, like in the example that we're using, let's say we're in Y9, okay? $500,000 home, $100,000 renovation, acquisition costs $600,000. So what that means is everybody else in the neighborhood needs to be around $600,000. That home, when you get done with it, if we have it appraised, needs to be in the realm of $600,000 or more. The reason for that is because the purpose of the renovation loan is not to give you the biggest, baddest dog in the neighborhood that you will never be able to sell because you are well underwater by the time you build, right? What happens if home values do drop and you do have to offload the property? You won't be able to do it, or you'll be in a foreclosure or a short sale situation. But the feasibility of the project means that when you rehabilitate or renovate that property, that it is going to meet the comparable sales in that neighborhood. Ron, do you want to talk a little bit about comparable sales and what that means?
When she's talking about comparable sales, you're looking at a neighborhood and you want the sales to be similar to your property. Usually I put a square footage range or maybe an age range or site size. So you're looking at the similar properties to that property that you're buying or renovating. So we'll look at the comps in the neighborhood that will help support that value of when it's completed.
And then the comps, how old, for appraisal rules, how old can you go back as far as the comps go?
Typically the lenders like to see your sales within 6 months, within a mile of the subject. They have certain other parameters that they're not too much different from the subject property. It depends on your neighborhood too. Some neighborhoods, if you don't have those sales, you got to go back and use older sales, but they generally like to see the sales within 6 months, within a mile of the subject, and no more than about 25% difference in living area or land area.
Thank you. So what that means in the feasibility test is, let's say that we have that same example, $600,000 acquisition cost, but let's say that the buyer wants to do a $400,000 reno. So now the property on paper, right, would be $900,000, but all the houses around you are only $600,000. That does not meet the feasibility test. It will not appraise. Your appraisal is going to come in short because no one within 6 months and a mile radius of your home has sold even close to $900,000. So in that respect, that would not meet the feasibility test. We would take a look at that and say, you've got to scale down your renovation, maybe fix all of your health and safety issues now. You can build that second story when we've got a little bit more equity, and the property is going to comp out based upon the comparables in your neighborhood. So that's what feasibility test means. Item number 3, home and termite inspections of the property need to be done prior to determine the work. So sometimes when you're in a purchase setting, the buyer may say, hey, I want to waive my termite inspection. I know that I'm going to have some renovations done, so I don't need to have a home inspection or a termite inspection. That's definitely not the case. In order for the contractor to determine what is actually wrong with the property, it needs to be done to the property to bring it up to code, those answers are going to be found in that home inspection and the termite inspection. So those two inspections are needed to be done. With those two inspections, you hand those to Building Science, the contractor, and then they will help you to determine what it would cost to fix those health and safety issues that were determined during the inspections. And then from there, you can add the customization pieces that you would like. So you've got to fix health and safety first, customization after that, okay? Once, item number 4 is giving those inspections over to the contractor, and then him making a bid on what all of those things will cost. And then from there, once the buyer or homeowner agrees with the contractor on what renovations are going to be performed, what customizations are going to be performed, then all of that information will be written up in a construction contract. They will also write up in, and then that information will be given to a consultant. So when you have minor renovations, like you're just going to be doing some painting or replacing appliances or some flooring, the renovation consultant does not need to be involved, okay? But when you have a larger scope of work, there needs to be a renovation consultant, and he is a third party, and what he will do, or she, is review the contracts that the contractor have put together for the lender. The underwriter, the loan officer, if you give me a construction contract and you tell me that you need X amount of beams and X amount of materials and X amount of nails, I have no idea if that is going to fix the elephant on your roof or not, right? That is not my scope of work. The underwriter and the lender's scope of work is managing the feasibility of your project, getting you the financing, and working through the steps. The renovation consultant is the glue between the lender and the contractor and the buyer. So what he does is he takes a look at those contracts to make sure that it is fully funded. What it means when it's fully funded is, let's say that you enter into a renovation loan and something terrible like COVID happens again and your contractor gets sick and is unable to finish the work. That the lender has enough money in that contract so that they can pick it up with any other contractor. Because remember, the purpose of the renovation loan and having that construction contract fully funded is that you actually end up with a finished product. And that's what the renovation consultant does. He's the checks and balances to make sure that enough materials are being ordered, enough items are being addressed to complete that renovation as it has been laid out in the construction contract. Appraisal and title report ordered by the lender. So once we have all of that information and it checks out what kind of renovations you're going to be doing, then we will give all that information to the appraiser, and like Ron said, he will go ahead and assign value even to those invisible things, right? As if the property had already been built, been renovated to that standard, whether it's a larger square footage or a more customized property. Item number 7 is going to be the underwriter reviews, and the building permits are received if applicable. We will talk a little bit about the different types of permits. We're going to have Sean talk about that in a little bit. The different types of permits that can be pulled in respect to your property. Now, when we are talking about building permits here in Hawaii, well, the one thing that we do know is that things are very, very, very slow at the Department of Permitting and Planning, which Sean will speak to here shortly. But if you are purchasing a property and the seller is not willing to wait for you to pull a building permit, then what we suggest is that you do the bare minimum in order to make that property health and safety wise complete. And then from there, once you take ownership and you live in the home, you can further work with your contractor in order to apply for your permits, have any plans drawn up, all of that stuff. So your dream may be that you buy that house in Waianae and that you build a second story to it. But we know that your building permits may take 2 years to get from DPP. So what the advice is gonna be is that you're going to do what we call a two-step, right? You're going to acquire and solve the health and safety so you can just take ownership of the property and start to live in it. And once you do that, then you can work with your contractor to draw up plans to build that second story and have them apply for those permits. And then when that's ready, we pull the trigger on your second renovation loan, and that way you can go ahead and build that second story. So once those permits are received, the loan goes to closing. So remember, no work has been done on the seller's home up until this point, right? So then the loan goes to closing just like any other loan would. That means that the seller gets his proceeds, he goes away. The title changes hands into your hands as the buyer. Realtors' commissions are paid, so they're not held hostage to the situation. And then the buyer stays behind with PRMG, or the homeowner stays behind with PRMG. We take that $100,000 in that example, we put it into that escrow account, which is held by PRMG, and then based upon the draw schedule, we start to work with the contractor in order to perform those draws. So work must begin within 30 days. So after loan closing, within 30 days, you gotta start breaking ground and lifting those hammers. And then the contractor will submit draw requests to PRMG as he goes along and finishes the project. And along those spaces, we will also have inspectors. So let's go back to the example with the elephant sitting on the roof. So if the contractor calls PRMG, submits his draw request and says, hey, I've completed the roof, the elephant is off, the roof is livable now, we will send out an inspector to make sure that that was done. And then he can move to the next step, okay? And do you want to talk a little bit about that? Sean, how is it that you put together a draw schedule and what goes into that for you as a contractor?
I was thinking as you were sharing about it, it can be controversial. It can be confrontational. But as a builder, we're financing a lot of the construction costs. And we're waiting to be reimbursed for that. So when we call for, when we request a draw, we schedule a third-party inspection to come out and verify that we've done what our draw is requesting, percentage complete on a scope of work. Subject to interpretation by that inspector. And we may have there may be some semantics involved or interpretation of where we're actually at in some of those cases, but ultimately that inspector reports back to the lender and issues a percentage that they feel is warranted for the amount of work completed. So it's a checks and balances system.
Exactly.
We do a lot of construction inspections also. Usually it's start of work, materials dropped off, foundation done, roof up, framing, drywall, finish, etc. They'll give us, okay, we want this amount of stuff done, go and check.
Mm-hmm. And that can happen rather quickly. I might anticipate framing being done at the end of the week, knowing that it'll take me a couple of days to get an inspection scheduled. So I might make a request in advance of when that work is actually going to be completed. And then upon verification that that work is done, then a payment release will be scheduled upon that verification. So there's some lead time involved with that. And try to forecast that so we can keep a project moving steadfast.
Yeah, and we'll call the contractor to confirm that it's been completed before we run out. So we work with the contractor too.
Awesome. Thank you both. You had a question over here.
Yeah, so let's say the project will cost $200,000, but you need a permit. So in the meantime, does the borrower start paying interest upon closing, or when the contractor starts to draw the money?
So in that respect, so that's a great question. So in that respect, you would not want to perform the renovation loan until your permits are almost ready, Okay, because just like we talked about, you can apply for permits with DPP and it's not ready for 2 years, right? Because the reality of it is remember, these are fully advertised loans. So once the loan funds, you are on the hook for the payment. So we're not going to have you, pull the trigger on the loan if the building permit is not ready yet. So in that space that you're referring to, that would be a refinance, not a purchase. Okay? In the purchase setting, what you're going to do is you're going to be taking on, and Sean's actually going to talk about this a little bit more, meaning that there's a number of different types of permits that you could pull. Okay? The building permit is needed in order to add square footage or change the footprint. Okay? But a restorative or rebuild permit can be if you're building to the original footprint, you don't need to go out and get a full-on building permit. And we'll talk a little bit more about that in another slide. Okay? But to answer your question, if you wanted to do a $200,000 build, and are you talking about in a purchase setting? Mm-hmm. Okay, then we would recommend the two-step for your buyer, which is that you would buy the home, just complete it to health and safety issues so you can live in it, and then work with your contractor to draw up the plans and apply for the permit. The other piece of that puzzle is how long you generally have in order to close on that property when you are trying to buy the property. Sellers want to close in how many days right now? 30 to 45 days. If you are going to do a fully customized addition to your liking, why would you put yourself under the gun to make all of those decisions in a week, right? Because even the fastest purchase transaction without a renovation component is going to run you about 30 days. So why limit yourself to 2 weeks to making that kind of decision? You would want to take on the property, fix the health and safety just to get in there, and then start working with the contractor in order to draw plans for that huge $200,000 build, because it's going to take a while before you can get there. And we're going to talk a little bit more about that with Sean in a few minutes. Okay, so after we do item number 10, number 11 is that the construction and all of the renovations must be completed between 4 and 12 months, depending upon the scope of work.